Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. All right, KG, let's talk about these markets. I mean, this feels like what October should have felt like. How would you characterize it?
I would agree. This is definitely a liquidation moment when you're looking at the market as a whole, not only when you're looking at equities, but also in the crypto space. You kind of mentioned it. We are seeing Bitcoin continuing to slide to the downside. It does appear that there is aggressive selling that is taking place, maybe some cash raises happening across the market in general here, and we just have not been able to find a bid. Now, we actually did break and close below the 50-day moving average for the S&P 500 yesterday. That was a key area of support that we have now lost. So you want to be able to recapture that over the next couple of sessions, because if you're looking at sectors specifically, we are starting to see them rolling over a tad bit here, especially when you're looking at consumer staples. Obviously, that's rolled over, not that big of a weighting when it comes to the S&P 500, but also if you're kind of looking at technology starting to stall out here a little bit. So it's more than a consolidation. It's definitely a pullback. We almost have a 5% pullback in the S&P right now. Maybe Nvidia earnings are going to turn that around, but if you kind of look at the past couple of reports for Nvidia, it has not really been a big mover, especially to the upside. It does stall out a tad bit and move a little bit lower here, and if that's going to be the same this time around, Diane, that could probably put a little bit more pressure on the S&P 500 as a whole here going into Thursday and Friday, which we have some economic data that could also shake up markets.
Okay, so that could shake up markets, that economic data, although some say, you know, it's hard to pin too much on them since it will be kind of backward-looking data. When you think about where this is this kind of a garden variety setback? Given where some analysts, et cetera, said valuations stand?
Yeah, I would say so. I mean, you got to treat it as just a normal pullback for now. I wouldn't even call it a correction yet until we get towards that around 8%, 10%-ish area. But this is a little bit more of a, sell the market, take some profits right now, maybe rotate a tad bit. That rotation trade has not really failed yet. It's just in specific pockets of the market. So yesterday you saw utilities, especially the traditional utilities, really outperform. On the energy front, we did see the sector itself pulling back a tad bit. But if you're looking at the subsectors within energy, the services portion continues to catch a bid, and that actually has been a pretty decent sign over the last couple of weeks here. So I still think it's a little bit more of a rotation, maybe some uneasiness when it comes to these debt raises as well. We obviously had Amazon raising some capital here in the debt markets over the last 24 hours as well, and that's just providing a little bit of caution here. You're seeing some fracturing. What I actually am looking at, Diane, over the next week or two, do we actually have two narratives right now that are colliding that is also creating this drawback? So not only the AI narrative, is it too expensive? Are we going to see return on capital? Is CapEx spend too aggressive? But also on the Bitcoin and crypto space, where we know that it can go through very aggressive up cycles as well as down cycles. And right now, it just seems like a lot of these companies, especially those that are treasury cryptocurrency companies here, are pulling back fairly aggressively. They were trading above premium value. They still are, but maybe we're starting to see that correction. So not a full-on sell everything type of an event, but maybe cracks in certain narratives of the market kind of working together to pull back the S&P 500 as a whole, I think is more of exactly what's going on as far as this event risk rather than one narrative over another.
Okay, let's talk about one narrative over another as it relates to Home Depot. So Home Depot's out with its quarterly results. Mixed bag here. But I wonder if this is an indication of how the housing market is doing or overall consumer. What's your take?
I think it's a little bit both. Now, if we look at Home Depot over the last couple of quarters, the reports haven't really been that great, but their guidance has been decent. They always continue to kick the can down the road about how optimistic they are around the consumer, especially when it comes to large, durable goods, which obviously drives a lot of that margin expansion for this company. It just seems like now it's kind of catching up to them. When you're looking at the earnings that came out, the adjusted earnings per share missed the street's expectations, coming in at $3.74. Street was looking for around $3.84 or so. Revenue did exceed the street's expectations, but once again, guidance moving forward, you are seeing a pullback or a readjustment to the downside when it comes to the EPS guide for the fiscal year here. You are also seeing a potential weakness when it comes to the commercial space. When you're looking at Home Depot, yes, they have the consumer, just like yourself, myself. We might go in there and buy some items, but they also then cater to the commercial space. They made several different acquisitions in order to expand that market share here, and they are starting to see some pressure there. They blame the consumer. Obviously, higher costs when it comes to tariffs and imports is also hitting this company. And then the last thing that I actually did note, Diane, hurricane season has not been that bad. And that's something that they did not project as well, which is also impacting them. So also the lack of storms driving or fueling sales in the third quarter is also being mentioned. Calendar third quarter.
Okay, all right. So a little bit of weather impact there too. Let's talk about Baidu. Baidu shares lower this morning off the back of its quarterly results. What are some of your takeaways here?
Yeah, so Baidu, if you're looking at the year-over-year comps, or revenue on a year-over-year basis down about 7%, online advertising revenue down 18% on a year-over-year basis here. Once again, they're talking about the consumer. A lot of competition within this space as well. They do make mention of that. And the consumer itself is still kind of reeling from the property crisis as well as lack of capital available to be able to spend on discretionary items, which is also impacting their business. Now, they also have the AI segment of their business as well. They are seeing some strength there. They continue to make investments to be able to expand that AI offering, and they are seeing an uptick. But if you're looking at the consumer space as a whole for this business, as well as others within this space, it's a little bit lackluster, a little bit weak, and they're really blaming it internally when you're looking at in China itself and the macroeconomic factors around the globe that is impacting their business. So we're seeing the shares down, I believe, around 2% in pre-market trading here, but you're starting to see a theme when you're looking at a lot of these names that have consumer exposure here around the globe.
Okay, let's talk a little bit about another earnings that you're across. Parent company of Temu, Pinduoduo, or PDD, out with its quarterly results. The stock is fluctuating in the pre-market. What's your take here?
Yeah, they actually had a pretty decent earnings announcement. The adjusted earnings per share did beat the street's expectations. Revenue came in line here. You're looking at revenue growth sitting at around 9% on a year-over-year basis. That's actually lower than what we saw in the prior year where they were hitting low double digits. So you are seeing a deceleration within that business, but once again, a little bit better than the street's expectations. They continue to talk about the competitive nature of the business. Alibaba, JD.com kind of eating into their market share a tad bit, pushing prices lower for a lot of the product offerings and obviously eating into margins. And they continue to talk about the competitive nature of the business, external macro factors here. I mean, this is, once again, a trend that is taking place. If you look at the Singles Day, that's obviously an event within China that actually does, drive sales. Kind of think about it as our Black Friday, if you will. Pinduoduo actually did see sales growth of around 11.7% on a year-over-year basis, outpacing JD.com at 8.3% and outpacing Alibaba at 9.3%. So some bright spots when it comes to sales, but overall, same type of narrative, same type of theme that you're hearing from these consumer companies within China.
All right, let's get your levels on the S&P 500 today, to the upside and the downside.
Yeah, to the upside, 6,700. To the downside, 6,550. Volatility is still elevated here. We are making lower highs. We are breaking some structure. So volatility can be on the horizon. Today's the last day for VIX options to trade. We do have the settlement tomorrow morning. So VIX options being elevated when it comes to volume. Today, Diane, will raise vol, and that could also keep volatility just as a whole elevated here. So be prepared for a very choppy market, to say the least.
Okay, all right, to say the least. That's one way to characterize it. Thank you, KG. That's Kevin Graydon, our senior markets correspondent.